So as you can see by crypto bubbles chart over here, certain altcoins are absolutely flying. You have Arweave up 65.3% off of major news. Matic just popped 10%. Flow up 16.4. Filecoin 17.3. And why is this happening when the stock market was crashing following yesterday's FOMC meeting? We're going to get into all of that and a whole lot more. So without further ado, let's get straight into it. And first, I wanted to start off with this chart over here. You can see in the top left, this is Jimbo Slicer, which is our very own Jimmy James at the office over here. And he used the strategy that we outlined on yesterday's show, whereby we said that at 2 o'clock, look for the move. At 2:30, the opposite of that would happen. And as you can see, he has the entries for a short. 2 o'clock, price started to get sent back to the upside over there, pumping during the FOMC meeting as they released the 75 basis points expected rate hike. And then obviously going into the press conference, the exact opposite happened. So he had 1, 2, 3. The fourth entry just got missed. So 3 entries entered and it shot all the way back down into the mid-range for the TP. So there is a lot of alpha on the shows. Make sure that you give the video a like, subscribe, hit the bell notification, and share it with your friends so that they don't miss out. Going into this tweet from Watcher Guru over here, you can see that the stock market got absolutely smashed with most of the stocks turning red on the day. And then this is a very, very important chart. And I was very, very surprised to see that the amplitude of the move that took place yesterday was not high enough to get this volatility to actually kick off. So the move didn't happen yet. We're still actually waiting for the major move. And that's why this show is very, very important. Stay till the end because I'm going to go over the levels that have to be reclaimed for Bitcoin in order for it to be safe, because it could potentially still be in a bit of danger. And there is a possibility of this being a massive, massive bull trap. Despite the altcoin massive returns that you're seeing in the double digits, you need to be cautious because price is still stuck below the middle Bollinger Band. Bollinger Bands are still tight, and we're waiting for the ultimate volatility to kick in, and it hasn't done so yet. And using the previous FOMC meetings, you often find that the real move actually only comes between 1 and 2 days following the meeting. The markets take a bit of time to digest and discuss. And then, everybody likes to find a narrative for why the market should move, and people start to make up their own reasoning. So for those of you who didn't watch the FOMC meeting, I watched the whole thing. Long story short, basically the Fed was pretty hawkish, meaning that that would be a bearish sign in the mid to longer term. They basically gave no real sight of an end for this. They said it's going to take a long, long, long time to get inflation under control, and basically removed any sort of a hint of a pause or a pivot in the market. They took that completely off the table. And they said gaining back control of inflation is their primary concern. And that's why the stock market absolutely tanked after that. But crypto seems to be doing its own thing. And longer term, this is something that we can't ignore because we are in a pivotal point where we're still on the verge of forming this long-term accumulation phase. And you can see this from Lark Davis. He says here, the Bitcoin monthly MACD, and I did show this to you guys yesterday. He said the last 2 bear markets ended when we got a reversal, exactly as we are seeing now. But that does not mean instant moon. It could mean we are about to start the long, slow grind up. So what am I saying? What I'm saying is that the bottom is potentially still not in. We could still see lower prices, but I don't know if we'll spend a lot of time at those lower prices. If we do go down and we go down hard, it would be met, I think, with a lot of demand very, very quickly. And I wanted to touch on, I'll go into a tweet quick. Let me just show you live time what the charts are showing. This is on the monthly chart, so exactly what he showed. And then we are focusing also on this RSI to reclaim above the 43.5 level, which is the dash line. That's the lowest that the RSI had ever gone previously. You want to see it reclaim that level and then start to mount this monumental up move. That would mean that the accumulation phase is well underway and we can start to look for higher prices. But I don't think that we're quite there yet. You need to remain patient. And the best strategy that you can employ at the moment is patience, number one. And number two, dollar cost averaging. If you come with a set time horizon, and I think this is a phenomenal tweet that Rand made, obviously while he's on the airplane on the way to Portugal, he can't sit still, he's bored, he has to do something. So he made a tweet thread over here. And I only really want to emphasize on just the one part because it's like 10 parts. He basically goes on to explain how the FOMC and aggressive posturing by the Fed is just noise in the long term, though. And he said it shouldn't affect your investment thesis at all. And specifically in this industry, it may actually be the biggest opportunity of your life. And he says the global markets and the Fed are currently fixated on inflation, interest rates, supply chain disruptions, etc. And here's the important part. These are all short-term issues that will be resolved in the next 12 to 24 months. And when you look at the chart over here, if this MACD obviously does start to pick up, this is definitely a lagging indicator. But if you know how to use these indicators correctly, you can make a lot of money. You can do very, very well. What you want to be doing is using this as an accumulation phase. And the best way to do that is to dollar cost average into what you believe are the top altcoin picks or top crypto picks. If you're out there and you want to play it safe, just stick with Bitcoin and Ethereum and maybe choose one of the top oracles, something like Chainlink. You can choose one from each sector and just in a disciplined fashion, week by week or month by month, you dollar cost average in. So go take a look at that tweet. I will retweet it over there so you can have a look at that. And then one way that I recommend doing this is using a decentralized exchange. This is specifically for your long-term holdings. And I've been looking for strong DEXs for the past while, and we recently onboarded Biswap as a sponsor, so full disclosure. But we did do our homework, and they have turned out to be the most efficient and probably one of the best in terms of rewards. So if you compare to what you're getting on PancakeSwap and Uniswap, the fees are almost the same. Well, they're actually exactly the same. The difference, though, the big difference is that you're actually getting half back as a reward. So anytime that you take a trade here, you're getting 50% in the BSW tokens, which is the Biswap token on the Binance chain. And therefore, you can basically accumulate those tokens. And if you want to liquidate them and sell them, you can, or you can just save them, because in the next bull run, those tokens are probably going to be worth a whole lot, as I do think this is one of the top upcoming DEXs. So what I do is, if you don't already, this is specifically for long-term holdings. Get yourself a Nano Ledger or Trezor, an offline storage wallet. And then I usually make my trades on here. So I connect my wallet to the swap over here, to the Biswap. And I basically make all my purchases week by week. I prefer to dollar cost average weekly. You can look at the DCA calculators and see the results of that. And you can also provide liquidity over here. If you do decide to add liquidity, you get additional rewards. I think you're getting up to about 90% of the fee. So the trading fee that they take, you're getting 90% of that goes to you and only 10% to them. So for those of you who are interested in that, if you do like the swaps, then have a look in the description below over here. Make sure to click that link and go and check Biswap out. Okay, very, very, very important. I just noticed this right now this morning, and I told you we have to keep a lot of focus on confirmation of the RSI on the weekly chart. And this is what's leading me to think there could potentially be a trap scenario where Bitcoin could roll over. Now, Bitcoin needs to reclaim around $20,400. If it reclaims $20,400 and closes the weekly above that level, then this should be safe, and it should break back through the resistance line over here, the trend line on the weekly RSI. But if it fails, that could send a whole lot more momentum to the downside, and Bitcoin could roll over. And I must be honest with you, I'm leaning towards that being the probability of what will happen. I've told you that the only reason that I took longs is simply just because there are higher lows, and I always bid higher lows if there are higher lows that are becoming established. But my gut feeling is basically still telling me that this could be a trap. Now, when you look at the chart over here, you have Bitcoin currently just below. It's resting with that 255 MA, which it had lost for such a long period of time. And you guys know the story. The longer that you spend underneath these moving averages, under the 255, the 200, as well as the 200 EMA, the more dangerous that becomes in the long term, because there's a probability of it rolling over and leading into a massive capitulation wick to the downside. The expansive phase has not yet happened, and you need to use every edge that you can. I know that it's exhausting. I understand. I'm in the same boat as you guys to come every day and produce content when there's very minor moves. But this is when you need the most focus, because the biggest moves happen when price goes sideways for a longer period of time. The longer the consolidation, the bigger the breakout or the breakdown, and that's where the life-changing money gets made. So keep an eye on this. You want to see Bitcoin reclaim the 255 MA. You want to see it reclaim above this trend line on the weekly RSI, and then hopefully break through the resistance that's above, which is between $21,000 and $23,000. So here you have Alpha BTC, and he says, some alts are really getting squeezed back up, but be careful if Bitcoin starts to roll over. Today and tomorrow will set the tone for the next few weeks to come. And that's in line with what I just said with the FOMC meetings. Often it's 24 to 48 hours following the results of the meeting that people digest the information and the market chooses its direction. Remember, the market moves because people make the market move. It's based on human psychology. So if the psychology is going to be that this is really, really bad, the Fed are not going to pivot, things are looking terrible, and we should probably sell, that's going to be a self-fulfilling prophecy, and everybody's going to start selling, and consequently the market goes down. So this chart over here is Bitcoin on the 4-day chart using the Consensus system, which is the short, medium, and long-term moving averages. You can see rejection after rejection after rejection into the long-term moving average, which is the purple one over here. You really want to see that get reclaimed as well, which is currently coming in at about 20,800. So you need to get above $21,000 and hold there if you're a bull. If you're a bear, you want to be shorting every time it comes into the zone with your stops just above at around $22,000. So that's speaking to the long-term traders. Now, the altcoin perpetual contracts over here, as you can see, I zoomed in on the 4-hour chart. Remember, we basically had the falling wedge, which had a confirmed breakout. Yesterday, I did warn you guys. I said, keep a close and keen eye on this. If this starts to break down, you want to exit your positions, because then altcoins are truly going to suffer. And it did. It could potentially be a trap situation over here, whereby basically bears went short over here. Maybe certain people closed their long positions, and then you had a massive spike reaction off of this zone. I still want to watch this area get properly reclaimed and hold above here for some time. This is a 4-hour chart. I'd like to see a couple of days held above this region to be convinced that altcoins are going to rally, because if you're using this as a trend, that is still lower closes. You had 4 8 hours, and then the 12th hour candle over here. So the third 4-hour candle opened right at those lows, lower than the left-hand side. But the posturing of this wick over here, or the look of this candle, does say that potentially it could be a trap, and altcoins might still have a chance to rally, which is what you are currently seeing in the market. So touching on the stock market, which is, of course, one of the more important things to be looking at, because this is going to drive crypto. Of course, crypto isn't going to defy all odds for too long. It's not decoupling yet, in my personal opinion. You need to see months to potentially even a year of that to be sure that it's decoupled. And Michael J. Kramer, he says here, the updated chart comparing the 2022 S&P 500 with the of 2022, and then comparing that to 2008, and then he shows here that pretty much it is still following exact. We had a little bit of a higher bounce compared to this level, but basically the rest of this year is where you want to be mega cautious, play the longs, but use stop losses, and then use your dollar cost average portfolio. That will always keep you safe. I can't emphasize enough how important dollar cost averaging is in an accumulation phase of the market. So not to say the stock market's in accumulation. VIX over here, 2022 compared to 2008, exactly the same thing. So this is the volatility index for the S&P 500 for those of you who are unfamiliar. And this one is still contracting, pattern is still following almost exactly the same, saying the exact same thing to you. Be cautious for the rest of this quarter. Be careful with your entries. Not to say that you can't go long, just manage your risk and have a plan of where you're wrong. A key word again, have a plan of where you're wrong. You need to know where you're wrong. You can't just be willy-nilly. You must know, where do I cut these positions and where do I go wrong? Remember, I've shown before a chart. I don't know how many of you haven't seen this because you might be new. I'll reshare it on my Twitter. I've shared it many, many times before. But essentially, the perception of a lot of people is that if you lose 50% of your position, you just need 50% profit to recover it. That's not the case. If you lose 50% of your position, you need 100% gains to get that back. And as you lose more and more, you need exponentially more gains. If you lose 90% of your position, you need about, it's almost 1,000% profit just to break even. Never mind. And ask yourself, how many coins or how many trades or investments have you made in your life that made you 1,000% profit? Probably not many, which is why protecting the downside is absolutely critical, especially in this type of environment. So be careful out there. And here you have Caleb. He says, objectively, Bitcoin has some catching up to do. And here you have the NASDAQ. It's kind of a fractal between the NASDAQ, or an overlay, I should say, between the NASDAQ and Bitcoin. Bitcoin is the orange. NASDAQ sold off exponentially over here. And Bitcoin is either decoupling or yet to catch up. And like I just said, the probability of a decoupling is still low. You need a lot more time to process before you can actually call for a proper decoupling. So here is the NASDAQ on the daily chart. Still in a strong downtrend. We had the gray box. I told you guys yesterday, I said keep a keen eye on this gray box. If you're a bull, you definitely want to see this reclaimed. But if you do reclaim it, you still got a whole lot of resistance up here. If you lose this gray box, your next target becomes the key quarterly. And so far, that's looking like the case. Even if today the stock market does bounce for some reason, I expect the same thing. This is going to act as resistance, and that's going to be troublesome for the stock market. S&P 500, this is the futures chart. Exactly the same thing, pretty much the same. I guess at the moment, this is kind of off the table, the 4,019. Sometimes I get impatient and this might hit in a few days' time, but for the time being, I'm just going to say that this is the line in the sand now. This is your new resistance zone. It's rejected multiple times from there. So I would expect lower prices on the S&P 500 VIX. VIX, you can see, made much, much lower low. Still waiting for this to bounce. But the crazy thing is that when this bounces, stock market has already come down quite a bit. And if this has an impulsive, strong move to the upside, because look at this, powerful move to the downside, you'd expect an equal reaction to the upside, somewhere towards this risk line. If this comes up, so if this was squeezing down while stock market was going down, and now at the same time this goes up, that will really, really, really hit the stock market quite hard. So you need to be very, very cautious of this VIX. Keep a close eye on that. DEXI, I wanted to touch on the DEXI. Look at that, pushing up. Again, reaching its critical area. I put a little trend line over here. You want to see how it reacts when it gets into that trend line, which, if that happens today, is going to be between about 100 in the 113 region for the DEXI. See how it reacts, if it's going to break through that or if it's going to turn over. Our little lines that we've drawn over here are still working out. So I said, if you want to see crypto run, risk assets run, this is what you want from the DEXI. You want it to push up, and then you want it to slowly turn over and break below this whole clustered area over here, specifically 108, 109. You want that level lost, and then probably it's going to be a major rally for risk on assets. Very, very important. Wow, look at that rejection. That must have just happened. I looked at this chart just now. The 2-year yield was up about 6-7% just now when I looked before the show, and now it's been left with a massive wick candle. So still a lot of volatility, a lot of indecision in the market. 10-year yield is recaptured its trend line and continuing on up. Remember, yields going up are generally bad for crypto and stocks, just in case you didn't know. So let's move on over here. This chart over here by Heinrich, he says that unpopular opinion, the market's rates have topped, which is what really matters to equities, which have already bottomed. Fed follows with a pause and then pivots later, which is less important. So he's saying use this as your guide. Don't focus too much on what the Fed is saying. He's saying use when these have truly topped. And I don't know, I mean, the 2-year, that's quite a big rejection. Let's see what happens over here. You want to see this start to establish a downtrend again, then you would have your signal. You don't need to wait for the Fed to pivot or pause. And this you want to see turn somewhere around here. If this can push into the 10-year yield, can push into about 4.2% and then reject from that resistance zone and make a lower high, break down this trend line, make a lower low, then we're starting to slowly establish a new trend. So keep an eye on that. Very, very important. I would agree with him if it does actually show signs of reversing. He's showing it's got bearish divergence, and we'll take it from there. We'll see what happens. Now, I told you guys, be careful with this chart. This chart is warning you that probably a little bit of downside is coming. And I told you now 20,400 is kind of the level that you want to reclaim. So if you have a look, that comes directly into this moving average, which is the blue one, 20,400. That is your resistance between there and 20,600. Once you reclaim that level, this has a chance to get its upside momentum again. But for the time being, it's looking like a pullback that might lead deeper to about 19,800, which was this previous major range that we were stuck in for such a long period of time. I want to see what happens when we hit the top of this range, if we are going to bounce from there. By the way, I would start to cut positions already. If I were you, I would start to be, I should say that with complete care. Don't just panic sell any of your positions now, but rather position yourself defensively, looking to buy the dip only if it bounces from these zones. Because once you start to fall under that level, I warned you guys yesterday, I said be careful, it could create like that tower top environment where it goes straight up, sideways for a bit, and then it comes straight back down. So you need to be cautious of that. Again, know where you're wrong so that you can cut the positions if need be. This chart over here, we're still narrowly holding above some of the important EMAs and moving averages. Once you completely lose those on a closing basis, so below 19,800, I would expect that would be a mega bull trap, and things are probably going to go down quite hard on Bitcoin. So be careful of that. Similar to the weekly RSI, which I showed you, that's rejecting from its trend line. You have the daily, which is falling back below the yellow trend line, which it temporarily broke out from. And then every other bear flag that we've had with a major breakdown since pretty much all-time highs looks something like this: breakdown. So now we need to see when it comes back into this trend line over here, is it going to hold? If this starts to break down, further downside momentum can be expected. The over here with the Gaussian channel, I showed you rejecting from the top on Bitcoin. Again, same thing, what I just outlined to you, that mid-level, which is coming in at 19,800, you really want to see that zone bounce. You want price to bounce from that level if you are a longer-term investor. Okay, short-term. Now talking to the short-term guys. Skew, he says here, BTC aggregate data post-FOMC. There's small spot interest that's returning here. So people are starting to buy again. And then the shorts are rotating out of the market and into short-term longs. So bids, they're buying basically. And that's what's creating a bit of a market pump. The other things that's causing the market pump on the altcoins is Doge, of course, is with Twitter because of Elon. I mean, he pretty much hinted at that. You guys know that. Arweave, there was an announcement that Meta and Facebook, so Instagram, Facebook, they're going to be using Arweave as their storage base, which is absolutely incredible. That's super bullish. And then Matic with Instagram, basically you can mint your NFTs and create NFTs on Instagram, and they're using Matic as the chain to do that. So some interesting unfoldings, but let's see what the charts are saying on some of those altcoins. So Bitcoin, first and foremost, let's just look at this chart. Anything of relevance here, starting to basically, it needs to hold this level. If it loses that, you're going to be making a low in comparison to this side over here. I told you guys that I'm doubtful whether we'll get that 21,600, but nevertheless, I'll still leave this over here as the inefficiency or liquidity grab. if Bitcoin pushes up into this zone, I will definitely be looking for short opportunities. As mentioned, yesterday's move was not as big as I expected. I was preparing to take shorts from this level over here, but it didn't happen. Okay, let's look at the charts that I gave yesterday. So yesterday we gave longs over here. Still, this is relevant. If you start to break below these regions over here, you want to stop out. You guys have this. If you don't have it, it's on yesterday's show. I clicked on all of them. Just go back to that. All the levels are there for you to take if you haven't taken those down already. Ethereum, you would have been stopped out. Remember, I gave a hard stop on this. I said the major stop would be below the white line over here, but I would rather stop out early below this moving average or exponential moving average, and then I'd rather re-enter later on. So that's a missed trade. Forget it. It's over if you're following me at least. Solana, you have a perfect entry. You did not get stopped out. It would have wicked you in, and pretty much you can just hold that and manage your risk. What I would do though now is I would immediately raise the stop loss over here because you don't want to see prices come back down here. I would have a hard stop literally one tick below that wick. If it comes back down there, you're out of the position. Now you've taken some risk off of the table. Let's see. Atom, it's the same thing. You got into the trade. It wicked you in. Now you can raise this as well. Same story, just below that wick. And there's your trade. So those are the ones that we're looking at. It's reclaimed the range lows. And you basically want to see it hold above the range lows over here. And then it'll give it a chance to take off. And you're targeting range highs. All the coins look the same. They're basically all in exactly the same place. The one that I wanted to touch on, let me grab here, was the Matic. Where's Matic? Matic, here we go. Let's see if I have the right one. Okay, Matic, perfect. This one's a little bit different. Matic has been one of the easiest coins to trade the range with in the sense that anytime you got to range high, short, range low, long, range high, short. Here you would have taken profit at mid-range anyway. You always take profit, like your first TP at mid-range, spike into the top. That would have been the perfect short. I missed that one. And look at this, guys. Last night, you would have got a great entry. You might get another opportunity. This is my favorite place to be shorting Matic from, is between $1 and $1.05. What you want to do is if you see major spikes into that zone, then you want to go on a lower time frame. So let's take a look at how this would have worked out. See how much time you had. Okay, that week you had no time. But you want to go on a low time frame, like a 15-minute. Let's go back here, and then I can show you what I mean. Okay, this would be a decent-ish example. Okay, let's use this section over here. So let's say you can see Matic is trending up, and you're expecting a rejection from somewhere within this region. Usually, I'll just take a very simple trend line like that. It doesn't have to be an absolutely perfect fit. Look for the line of best fit for you. And when it starts to break down within that region, so let's do it like that. Okay, I understand this is not how you use trend lines, by the way, guys. I know it's broken that down, but what we're looking for is the line of best fit, most touch points, and when it starts to reject from near the $1 area, then you're looking for your short entry. So what do you have over here? And this is what you're going to do the same thing now if it happens again. So let's grab this line over here. Okay, so you have bullish structure, high, low, lower high, but still holds the higher low, higher high. Okay, higher low, there, lower high. Now you're paying attention. The same way that you're paying attention over here, you're paying attention. Watch, watch, watch. Breaks the main trend line down. Lower low. Bang. Now you know. Time to enter. Up. Lower high. Retest of this trend line over here and within this general area. Enter short. Stop loss goes above. Stop loss above here. Targeting down to mid-range for TP1 and all the way at the range low for TP2. Entered into the short. Bang. Goes again, lower high, you in. There it fakes you out a little bit, but you still have your stop loss at the top. Hold, down, down, down. And then here you can probably, then I use this trend line. On a break of this trend line, I take early profits. So down, down, breaks through to the trend line, early profits. And the reason why is because then it ends up coming back into the range again. And then you just play it again. Use a trend line, wait for the breakdown, breaks down over here, lower low, lower high, enter. Stops above, stops above on the range high, wait, and then the rest is history. Pretty much it goes to where we are now, mid-range, and now it's coming back up. So that's the way that I played that one. A little bit of a longer stream. I see we're almost at 30 minutes, one of the longest ones that we've had. Wait for a reaction within this area, switch onto a low time frame, look for changing market structure, waiting for a break of structure, which is a lower low below the previous, whatever the previous low is. Wait for the bounce, short the lower high, stops above on the range high, and I think that's it, guys. If you enjoy these videos, do me a massive favor. Give this video a like. Hit the bell notification. Bell notification, is that the right word? Hit the bell. Hit the subscribe button as well. And then check out as well, again, below, just a reminder, with Biswap, phenomenal exchange. Definitely worth using if you do keep your coins offline, which you should. Your long-term positions, I really recommend keep those offline. You don't want those on exchanges if you're going to be holding it for years, 5 years, 10 years, anything above that. Basically, you want to own your private keys. And that's it from me, guys. I will see you all on the next video. Thank you all for watching. I appreciate each and every one of you. Thanks for coming every day, and I'll see you on tomorrow's video. Cheers for now.